Hey everyone, welcome back to Corporate Decoder, the place where we unpack the financial secrets of big companies by looking at their official filings. Today we're diving into Diamond Hill Investment Group's latest report, and let me tell you, there's a reason why they call it Diamond Hill, because we might just be uncovering some shiny new insights into their assets under management. So what's the big deal with Diamond Hill Investment Group? They're essentially a company that manages money for other people and institutions, helping them invest and grow their wealth. Think of them as professional money gardeners. This particular report gives us a snapshot of how much money they were overseeing as of August 31st, 2025. The big number here, the total amount of money being managed, is a whopping $31 billion and $20 million. That's a colossal sum. To put it in perspective, that's more money than many small countries have in their entire yearly budget. They've broken this down in a couple of interesting ways. First, let's look at how this money is held. The largest chunk by far is in Diamond Hill funds, which are basically investment pools where many investors' money is combined and managed together. This category alone accounts for $19,746 million. This tells us that a lot of people trust Diamond Hill to manage their money through these pooled investment vehicles. Then we have separately managed accounts valued at $5,675 million. This means these are individual investment portfolios managed specifically for a single client, often with more customized approach. And lastly, we have other pooled vehicles, which amount to $4,074 million. This could include things like hedge funds or other specialized investment partnerships. Now this is where it gets really interesting. How are they actually investing all this money? They've categorized their assets by investment strategy. The biggest slice of the pie here by a mile is large cap, commanding $16,702 million. This means they're primarily focusing on investing in big established companies, the blue chips of the stock market. Following that, we have large cap concentrated at $170 million. This likely means they're picking a smaller number of large companies they believe have exceptional growth potential. Then there's core fixed income, which is $3,446 million. Fixed income generally refers to investments that pay a fixed rate of return, like bonds. This indicates they're not just chasing growth stocks, but also managing risk by including more stable investments in their portfolios. Another significant category is short duration securitized bond at $4,673 million. This is a bit more technical, but generally refers to bonds backed by specific assets, like mortgages. The short duration part means these bonds mature relatively quickly, making them less sensitive to changes in interest rates compared to long-term bonds. This is a key piece of information for understanding their risk management. They also have securitized credit at $116 million and securitized total return at $31 million. These are further variations within the securitized asset space, suggesting some specialized strategies within their fixed income offerings. Looking back at the investment vehicle breakdown, it's clear that Diamond Hill funds are their bread and butter, representing the largest portion of their managed assets by far. This implies their core business model revolves around attracting investors into these collective funds. And all of these strategies together bring us back to that impressive total of $31,020 million in assets under management as of August 31st, 2025. This figure showcases their significant presence in the investment management industry. The report is signed by Thomas E. Line, the Chief Financial Officer and Treasurer. This confirms the accuracy and official nature of the information provided. In essence, this filing is a straightforward update on the company's managed assets, highlighting their scale and investment focus. It doesn't reveal any dramatic changes or unexpected events, which in itself can be a good sign for a stable investment firm. Now for my take on Diamond Hill Investment Group. Their sheer scale, managing over $31 billion, is undeniably impressive. This level of assets under management indicates strong client trust and a successful track record in attracting and retaining capital. The dominant focus on large cap and core fixed income strategies suggests a generally prudent and established approach to investment management. They aren't chasing speculative high-risk ventures, which aligns with the conservative nature many investors seek from asset managers. The significant allocation to short-duration securitized bonds signals a careful approach to managing interest rate risk, a crucial factor in today's economic climate. However, while these numbers point to stability, we don't have comparative data here to see if their assets assets under management have grown or shrunk. A company of this size needs to consistently show growth to remain competitive. Without seeing trends over time, it's hard to say if they are gaining market share or just maintaining their current position. The diversification across Diamond Hill funds and separately managed accounts is a strength, catering to different client needs. The lack of any mention of new hires, major acquisitions, or significant strategic shifts in this particular filing suggests a period of steady operations. For risks, while their focus on large cap and fixed income can be a strength, it also means they might be missing out on high growth opportunities in smaller companies or emerging sectors. Their performance is heavily reliant on the general health of the broader market, particularly large cap stocks and stable bond markets. Any significant downturn in these areas could directly impact their managed assets. In conclusion, Diamond Hill Investment Group appears to be a solid, well-established player in the asset management space, with a clear focus on larger, more stable investments. Their substantial assets under management reflect a market reputation for reliability. The key missing piece to a full evaluation would be a comparison of these numbers to previous periods to identify growth trends. But based on this snapshot, they seem to be managing investor money responsibly and conservatively. What's your take on these numbers? What do they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.